Good afternoon and welcome to our 12th Annual International M&A Awards, hosted by the M&A Advisor. We are delighted that you can join us here today. I'm TV host and radio personality Rosalie Michaels, and I'm thrilled to have such a well-rounded and deserving group of recipients to honor today. These awards have become the benchmark for deal-making excellence and recognize the leading international M&A transactions, restructurings, and financings, products and services, as well as the specific firms and professionals who are setting the benchmarks for international activity. In addition to celebrating the accomplishments of the top performers of the year, the awards gala will also feature an amazing keynote panel discussion and messages directly from market participants just like yourself. But before we kick off, I wanted to give a quick thank you to our 2021 program sponsors and supporters. Thank you to UHY Advisors, Melcap Partners, LLC, L. Catterton, Leonis Partners, Churchill, Jordan Knopf and Company, Horizon Partners, Prairie Capital Advisors, Ernst & Young LLP, Wombat Capital Markets, Kramer Levin, Stradley, Ronan, Stevens & Young, LLP, Global Upside Corporation, SB 360 Capital Partners, LLC, Capstone Headwaters, Axit Capital Partners, VRC Valuation Research Company. Your support makes programs like this possible, and we encourage you all to visit their websites and set meetings to learn more about their products and services. This year's award winners were tabulated by an independent judging committee comprised of top M&A industry experts. And now, to get right into it, we'll begin with our first awards category, Sector Deal of the Year. The first award is for Energy Deal of the Year, and the winner is Acquisition of W&W Energy Services by Petrofac. The deal team is Gulfstar Group Lynch Chappell and Alsop, Petrofac, Inc., PWG, and W&W Energy Services, Inc. Congratulations, everyone. The next award is Financials Deal of the Year, and the winner is Investment in InterSwitch by Visa. The deal team is FT Partners, InterSwitch, and Visa. Congratulations. Our next award is for Materials Deal of the Year, and the winner is the sale of Republic Metals Corporation to Asahi Holdings, Inc. The deal team is SSG Capital Advisors, LLC, Arnold & Porter Ackerman, LLP, Cooley, LLP, CBIZ, Inc., Luskin, Stern & Eisler, LLP, Ernst & Young, LLP, RPA Advisors, LLC, and Paladin Management Group, LLC. Congratulations. The next award is for Consumer Discretionary Deal of the Year, and the winner is the acquisition of majority interest in AXS TV and HDNet Movies networks by Anthem Sports and Entertainment. The deal team is Clear Skies Partners, HDNet LLC, and Anthem Sports and Entertainment. Congratulations, everyone. Our next award is for Consumer Staples Deal of the Year, and the winner is the acquisitions of Good Food Holdings and New Seasons Markets by eMart. The deal team is Denton Citigroup, EYKPMG, McMillan Doolittle Paul Hastings, and Piper Jaffray and Company. Congratulations. The next award is for Professional Services Deal of the Year, and the winner is the sale of Von Q to Capital D. The deal team is Raymond James, Von Q, and Capital D. Congratulations, everyone. Our next award is for Information Technology Deal of the Year, under $1 billion. And the winner is the investment in Fractal Analytics by Apax Partners. The deal team is Fractal Analytics, Apax Partners, TA Associates, and Kazana Nacional. Congratulations. The next award is for Information Technology Deal of the Year over $1 billion, and the winner is the acquisition of Converge One by CVC Capital Partners. The deal team is Raymond James, CVC Capital Partners, and Converge One. Congratulations, everyone. Our next award is for the Telecommunication Services Deal of the Year. And the winner is the partnership between Legacy Telecommunications, Inc. and Enertech Resources Holdings. The deal team is J.D. Merritt, Legacy Telecom, Enertech Resources Holdings, and Tower Arch Capita. Congratulations. The next award is for Healthcare Life Sciences Deal of the Year. And the winner is the acquisition of Spectrum Solutions and Go-To Fulfillment by DW Healthcare Partners. The deal team is Generational Equity, DW Healthcare Partners, EY Hub International, Haynes & Boone Skidmore Olawson, Paul Hastings Workman Neidiger, and Corporate Diligence Specialists. Congratulations, everyone. Our next award is for Industrials Deal of the Year. And the winner is the acquisition of Cincinnati Sub-Zero's industrial test chamber business from Genther by Weiss. The deal team is Technique, Statesman Corporate Finance, Cincinnati Sub-Zero, Weiss Technique, and the Shunt Group. Congratulations, everyone. And now a word from our friends at Leonis Partners.
Everyone, Stephen Miller, director here with Leonis Partners. We are a middle market technology investment bank and working with various types of technology-driven business models, from payments to tech-enabled services to pure SaaS, working on behalf of founders, venture capital firms, and private equity growth and buyout investors on sales, recapitalizations, private placements, growth equity checks, a real varying spectrum of different types of transaction considerations, the myriad of which has only grown in today's very active technology, private equity, and acquisition landscape. We're a collection of advisors with backgrounds from bulge bracket investment banking to consulting to outsourced CFO to private equity, bringing a nice mix of background and experience to a true strategic advisory environment.
Our next award category is for the Firm of the Year. And the award for Accounting Due Diligence Firm of the Year goes to ACA Compliance Group. Congratulations. The next award is for Boutique Investment Banking Firm of the Year. And the award goes to Equitech. Congratulations. Our next award is for Investment Banking Firm of the Year. And the award goes to KPMG Corporate Finance, LLC. Congratulations. The next award is for Latin American Investment Banking Firm of the Year. And this award goes to PC Capital IB. Congratulations. Our next award is for Communications Firm of the Year. And the award goes to FTI Consulting. Congratulations. The next award is for Private Equity Firm of the Year. And this award goes to L. Catterton. Congratulations. The next award is for Valuation Firm of the Year. And the award goes to VRC Valuation Research Company. Congratulations. Our next award category is for Product Service of the Year. The award for Product Service of the Year Information Management goes to CT Corporation's Global Services. Congratulations. Our next award is for Product Service of the Year Market Data and Research. And the award goes to Pitchley. Congratulations. The next award is for Product Service of the Year Professional Services. And the award goes to EY People Advisory Services. Congratulations. And now I would like to turn it over to our friends at Horizon Partners.
Hey y'all, Mike Firmage here, co-founder and managing director at Horizon Partners, what we would call an artisanal M&A advisory firm in the San Francisco Bay Area, located in the beautiful Presidio. One of the very best parts of the transactions we've closed is the few occasions that we've had to work with international clients and international buyers. We've done a fair amount in Canada, and we've had some buyers as far as Prague and Berlin, which has been a real pleasure. Our firm is predominantly in North America, so if there's anything that I'm jealous of, as it relates to other financial professionals. It's those that are doing international, global work on a daily basis. My wife has a father who was a first-generation immigrant from China. Her mother is first generation off the Navajo reservation. And so sort of international relations, East meets West, is a big part of our family. And just really commend you for all the things that you folks do to build our world through financial services and transactions. And I express my jealousy in what you get to do there. We love our clients, we love what we do, but being mostly domestic, it's a bigger world out there than we typically experience. So all of my best wishes, all of Horizon's best wishes for a better 2021, for stability and happiness, and much success to y'all.
Our next award category is for Professional of the Year. The award for Investment Banker of the Year goes to Robert Cowen, Managing Director with Leonis Partners. Congratulations, Robert. Our next award is for Corporate Development Professional of the Year. And the winner is Peter Wexler, Chief Legal Officer with Schneider Electric. Congratulations, Peter. The next award is for Legal Advisor of the Year, and the winner is Jermaine Gurr, Partner with White & Case. Congratulations. Our next award is for Service Professional of the Year, and the winner is Carlo Franchi, Partner with Palo Alto Strategy Group. Congratulations, Carlo. And now a word from our friends at Leonis Partners.
Hi, Rob Burton with Leonis Partners. I just wanted to say thank you so much to the M&A advisor for the recognition and accolades, especially for Robert Cowen winning Investment Banker of the Year. Robert's Managing Director with Leonis and has been a leader amongst our team, especially through the last 12 months, through an incredibly difficult period, being a thoughtful, responsive, and incredibly stable leader for our clients, driving transactions across the finish line, even despite the incredible upheaval that COVID has caused within both ecosystems, economies, and more specifically within companies and clients' day-to-day businesses. So thank you so much for the recognition, Bob. You deserve it, and your leadership will be a foundational force for us as we continue to grow into 2021 and 2022. Thank you.
Our next award category is Corporate Strategic Deal of the Year. And the award for Corporate Strategic Deal of the Year, $10 million to $50 million, is for the sale of Aulick Leasing Corp. And Sherall LLC to TFI International, Inc. The deal team is Bridgepoint Investment Banking, Aulick Leasing Corp., Sherall LLC, and TFI International, Inc. Congratulations. The next award is for Corporate Strategic Deal of the Year, over $50 million to $100 million. And it's for the acquisition of Global Sales Training, Inc., doing business as Richardson by Sales Performance International. The deal team is Capstone Headwaters, Alvarez and Marcel, Armstrong Teasdale, and Sales Performance International, and Clifford Chance Cartesia. Congratulations. Our next award for Corporate Strategic Deal of the Year, over $100 million, is for the acquisition of Primal Nutrition by Kraft Heinz. The deal team is Shepard, Mullen, Richter, and Hampton LLP, Primal Nutrition, Kraft Heinz, Paul Weiss, Rifkind, Wharton, and Garrison. Congratulations, everyone. Our next award category is Cross-Border Deal of the Year. And the award for Cross-Border Deal of the Year, over $10 million to $50 million, is for the sale of Micropen Technologies Corp. To Excelia USA. The deal team is Interocean Advisors LLC, Excelia USA, and Lincoln International Micropen Technologies Corporation. Congratulations, everyone. Our next award is for Cross-Border Deal of the Year, over $50 million to $100 million. And it's for the acquisition of Odonto Company by L. Catterton. Congratulations. The next award is for the Cross-Border Deal of the Year, over 100 million to 250 million. And the winner is the acquisition of 3M Company's product safety division by Teledyne Technologies. The deal team is McGuire Woods LLP, 3M Company, Teledyne Technologies, and Cleary Gottlieb Stein and Hamilton LLP. Congratulations, everyone. Our next award is for the cross-border deal of the year, over 250 million to 500 million. And the winner is the trade sale of Rafi GmbH and Company, KG, to Oaktree. The deal team is Axit Capital Partners, Oaktree, and Rafi GmbH and Company. Congratulations. The next award is for cross-border deal of the year, over 500 million to 1 billion. And the winner is the sale of Pronova to Nagase. The deal team is Lazard Middle Market, Levenfeld Pearlstein, Nagase Holdings America Corporation, Pronova Group, and RSM GCA Advisors. Congratulations, everyone. And the next award is for cross-border deal of the year, over 1 billion. And the winner is the acquisition of Schwann's Company by C.J. Charles Jadang. The deal team is Piper Sandler and Company, Schwann's Company, Morgan Stanley, and C.J. Charles Jadang. Congratulations, everybody. And now a word from our friends at Leonis Partners.
So as we look at 2021 and probably even further out into 22, this is a year that I think we will be, continuing to try to accelerate growth, both through hiring and through a lot of other initiatives that we're taking internally. I think the behavior probably signals what we think we're going to see, or continue to see rather, within the technology M&A universe. As people have probably noticed in the last 8 or 9 months, coming out of the bottom of a recessionary period, in March and April, there's been a market turn in technology stocks, both on the public exchanges as well as in the private markets. And for the verticals that have not been directly affected, such as hospitality, travel, leisure, et cetera, where the technology ties back into those verticals, we've seen multiples hold up quite well. In fact, a number of processes we were worried might not hold up through the worst of COVID in probably May, June. As the credit markets began to kind of soften, we were a touch worried, but by the time the Fed stepped in and intervened, and we saw mid-market credit kind of come back quite quickly, what we realized was by June and July, it was allowing those transactions that we were concerned about to continue to transact at very nice multiples, because the businesses were also performing as well. Fast forwarding, coming through the end of the year, I think there was also some natural agita in the market around who would win an election cycle, where some owners looking ahead said if there was a change of control and the Congress as well as the executive branch and tax policy were to change, they'd want to be exited by the end of 21. Our team was definitely the beneficiary of some of that thought process and behavior. And as we turn into 21 and start this year, especially with the recent Georgia election, I do think we are still talking to owners out there who are looking ahead and looking past the stimulus, but onto how you finance the stimulus, and ultimately what does that do to tax policy and things like cap gains, where if there's a large enough change in the cap gains rate relative to how fast you may be growing, it may make sense to look at a recapitalization or a full exit even this year. So as we look at that, we think the back half of the year could quite potentially have a lot of accelerant to it, especially as we kind of pull through people being vaccinated and getting back to a little bit more normal pattern of life. So we are excited by what we see, at least in the M&A markets, within the technology ecosystem. And from that standpoint, we'll be putting investment into the firm to grow and to be able to take advantage of what we believe will be a tailwind coming through the second half of this year. So as we think about 21 and 22, we are excited. We do know that multiples are very high within technology, at times some may say dangerously high, and we have no view as to when that changes or not. But for the time being, it is allowing a lot of our clients to take advantage of a very strong and robust environment. And we for companies that are in the mid-market, 50 to 250 million in enterprise value, we continue to think that will hold up with the dry powder from private equity firms, as well as even the strategics, entering the fray to continue to take advantage of growth opportunities and use very high-priced capital that has come down significantly given their multiples. So we're excited for 21 and for 22.
Our next category is Private Equity Deal of the Year. And the award for Private Equity Deal of the Year, $10 million to $50 million, goes to Mobius Equity Partners for the investment in Access Partnership. The deal team is Equitech Mobius Equity Partners and Access Partnership. Congratulations, everyone. Our next award is for Private Equity Deal of the Year, over $50 million to $100 million. And the winner is the acquisition of Spectrum Solutions and Go-To Fulfillment by DW Healthcare Partners. The deal team is Generational Equity, DW Healthcare Partners, EY Hub International, Haynes and Boone, Skidmore Olufsen, Paul Hastings, Workman, Nidegger, and Corporate Diligence Specialists. Congratulations, everybody. The next award is for Private Equity Deal of the Year, over $100 million to $250 million. And the winner is the sale of lake shirts to Carlson Private Capital Partners by Vermilion. Congratulations. Our next award is for Private Equity Deal of the Year, over $250 million to $500 million. And the winner is Gridiron Capital's partnership with Jacent Strategic Merchandising. The deal team is Gridiron Capital, Jacent Strategic Merchandising, and Stifel. Congratulations, everyone. The next award for Private Equity Deal of the Year, over $500 million to $1 billion. The winner is the sale of Cumbel Group to HG Capital. The deal team is Raymond James, Cumbel Group, and HG Capital Waterland. Congratulations. Our next award is for Private Equity Deal of the Year, over $1 billion to $10 billion. And the winner is Genesis Care's capital raising, including KKR Investment and European TLB. The deal team is Record Point EY, European TLB, Genesis Care, Herbert Smith Freehills King and Wood, Mallisons, KKR Capital Markets, LEK Consulting, Morgan Stanley PwC, and Record Point UBS. Congratulations. The next award is for Private Equity Deal of the Year, over $10 billion. And the winner is the acquisition of Buckeye Partners LP by IFM Investors. The deal team is White & Case LLP, IFM Investors, and Buckeye Partners LP. Congratulations. Our next award category is Regional Deal of the Year. And the award for Africa Regional Deal of the Year is for the organizational structure with affiliates of Nitya Capital, Silver Peak, and the O'Lion Group. The deal team is Gray Reed and McGraw LLP, Sherman and Sterling, Roberts Michael Weinberg, Butler Haley PC, Nitya Capital, O'Lion Group, and Silver Peak. Congratulations. Our next award is for Asia Regional Deal of the Year. And the winner is Financing of Beta Excovery. The deal team is Zhejiang TNC Law Firm, Linklaters LLP, Beta, and Excovery. Congratulations. Next award is for Europe Regional Deal of the Year, and the winner is the acquisition of Converge One by CVC Capital Partners. The deal team is Raymond James, Converge One, and CVC Capital Partners. Congratulations. Our next award is for North America Regional Deal of the Year, and the winner is the acquisition of MS Industries, Inc. by Nudi Carlo USA, Inc. The deal team is Howard & Howard Attorneys PLLC, Nudi Carlo USA, Inc., MS Industries, Inc., Weil, Gottschall & Manges LLP, UHY, and GCI. Congratulations. And now I would like to turn it over to our friends at Horizon Partners.
Okay, well, hello, everybody. Happy 2021. New Year's always a great time from my perspective to sort of retool, think about what matters most, and kind of move forward with vigor. So hopefully this brief presentation on Horizon Partners will not be of the ultra boring variety. Here on the screen, you see kind of our lead-in slide, which is got this by bootstrappers for bootstrappers tagline to it. We are sort of a differentiated firm. I'd probably go so far as to call Horizon Partners an ultra boutique based in the Presidio of San Francisco. Not only have we been very specialized in technology, but we have also really focused in on a subsection of technology, which is the technology bootstrapper. And so I think for just about everybody, that's probably a term that you're very familiar with, but founder run enterprises, founder financed enterprises. And in fact, within the financing category by entrepreneurs, it's really a business that has been built on itself. So from a very early period, having found product market fit, finding customers right out the gate that will pay for the products provided, and then the business has been profitable enough to sort of sustain growth for a meaningful period of time. Horizon Partners focuses on transactions in really the $50 to $250 million enterprise valuation ranges. Over the last couple of years, our average transaction has probably been right around $100 million. And so this by bootstrappers for bootstrappers also means myself and my co-founder, Sandy Corey, built the firm without outside capital. I think that's not as hard to do, as we all know, in financial services as it would be in software and other markets. But it's been a great pleasure over now, I guess, 11 years to work very closely with founders at kind of this critical moment when they're ready to monetize at least some of the value that they've built in their business, and in some cases sell the entire business to a strategic. We've got, I think it's somewhere around a half dozen slides here. I'll flip through most of them very quickly, but it'll give you a sense for what Horizon is about. I think with the bootstrapper in this slide, we'll kind of move through it pretty quickly, but our focus has been built around what I would say something that sits in between a traditional investment banking model and then strategic advisory and operational advisory. So when we get working with a client, often it'll be a year, year and a half, even 2 years and beyond that we're involved in the operations, thinking about go-to-market. Often with a bootstrap business, you've built some incredible strengths around product market fit. In many cases, you find a business that is what is now often termed a product-led business or product-led growth. When we started the firm, that was not a term that folks were familiar with, but it's sort of these very, very capital efficient companies that do certain things very, very well, but don't have much of a back office. Typically, there's not a CFO. Often there's not a controller, and you might have a bookkeeper, a local accounting firm behind it, no legal. Often the organizational documentation was sort of done on LegalZoom. And so when we get involved before we take a business to market, independent of sort of the significant enterprise value that these companies may have, we work to put the business in a position to sustain a full closing diligence process. And often that puts us in the position of investor, so to speak. So it may not be investment of firm capital, but it'll be investment of often, 1,000+ hours of our time before we even take the business to market. So this gives you kind of a sense for how we think of the world. This next slide, it's a very, very busy slide. And in fact, I think it's one that I wouldn't want to spend a whole lot of time on, though the center, I think, is really important. Often with a bootstrap business where documentation may be light, and without a strong advisor and partner, you would not be in a position to kind of deliver all of the diligence necessary to close. Credibility would be diminished. And so our process is built around enhancing credibility where the business that has been built and the beautiful components of that business are not sort of hindered or diminished through a little bit more of a haphazard closing back end. And so that's really at the center of what we do at Horizon Partners. moving along, this is a nice visual depiction of what we're about. You see this 90% plus close rate. That is actual, and that's of the clients that we take on that pay us a one-time retainer fee. What percentage of those close? And so I think we've had just a few in our 11-year history that has not closed. And, those ones are typically founder gets reinvigorated during the process, and typically we'll close them in a second go round when the founder sort of feels like they've had the run that they wanted to have. And if you think about a 90% plus close rate, and if you think about a transaction process that may span a couple of years, including a year plus of sort of operational advice that we've given on the basis of a one-time 50 to 100K retainer fee, we have to close all our deals or else our business just doesn't work. And so the way that we kind of think about this is only take on clients where we feel like there's a tremendous alignment in purpose, alignment in kind of this product-led growth model, exceptional products that have a strong retention rate. Typically, our clients will have north of 100% revenue retention rate. And then that allows us to just really invest with our time and put the business in a position where there will be, easily a half dozen, typically a dozen plus strong letters of intent. And then those folks will narrow, and often we close in a non-exclusive closing process. And so you can kind of see on this slide the background and the backdrop of what is Horizon Partners, starting with great fit, leading into doing a lot of data cleaning and getting into each component of the business, often illuminating for our clients for the first time what their churn rates actually are and how they can go about best practices to reduce churn rates, getting into their development model for a software company, and if they're not sort of agile, helping them to see the merits of agile. And we've had clients where we've helped them transition their development processes pre-transaction. We get into things like pricing. Often our clients, they found a great product market fit and the product has sold itself, but they've never considered whether they're underpricing or if they're not capturing the low end of the market because they're pricing too high, and there's an ability to sort of price discriminate. So, it's really kind of a roll up the sleeves, effort first, business first approach. And then, fortunately for us, across 11 years, it's turned into just about every client we take on does transact. And that's, I would say by and large, Horizon Partners. These next few slides, nice backdrops on thinking or looking at how we view Horizon Partners. Credibility is at the forefront, we believe, in any transaction, and that whether it's a financial sponsor or a strategic acquirer, ultimately those folks that pay, top quartile and top decile and top percentile multiples in a transaction do so because they think that the business is credible in its capacity to grow in the future. And you see sort of three of these legs to the stool in this Venn diagram on how we think about credibility. As you consider what often reduces credibility for a bootstrap business is, those companies that command premium multiples tend to be in this growth stage. And so in sort of this chart, you see when you're prepared to grow, your enterprise value is expanding rapidly, but you also experience a lot of risk. And the, sort of numerator versus denominator, i.e. the growth and where the business moves against the discount rate, is really where folks determine whether it's sort of a 50th percentile multiple, middle of market, or whether you get into sort of the upper levels. And so for us, often it comes down to kind of this blue highlighted zone in the chart where our clients have done amazing things. They may be at 10 million annual recurring revenue, or 15 million, or even 20 million in annual recurring, with strong operational leverage, exceptional marketing efficiency, but they don't know how to present it, and their data may be messy, and so Horizon gets in and really helps to present a business that works with Horizon as growth ready and in a position to scale for the investors or the acquirers. And it's been really a great journey. We've as you see here, just with some of our clients, we've taken on CFO roles multiple times. We've helped software businesses that have been very successful to retool their software platforms, think about how they go about development and new product. We've helped businesses that have become global standards in the products that they provide think about their mobile approach and how to position it. We've helped businesses go from only cash-based financials to being the individuals in there doing journal entries. So, across dozens of clients and closed transactions in 11 years, we've just been able to have, these really unique relationships. We often call the brand of advisory that we provide artisanal M&A advisory, i.e. sort of this bespoke, highly customized transaction set. And, I appreciate y'all listening. This is probably longer, as often decks are, than I would have thought in putting it together. But what I would really hope for everybody in 2021 is that, in the same way that we've been fortunate at Horizon to build a model that is filled with passion, where those strengths that we do have line up with the needs of our clients, I wish for each and every professional here that those same things line up in your unique businesses and models. Ours is different for a certain set of clients, and I'm sure there's things we would not do as well as your spectacular firms do for yours. So for all of us, here's to a more stable 2021, to many transactions closed, and probably more than anything else, a great deal of value added to the many clients that we're fortunate to work with. And that would be our piece here. Thanks for listening.
Our next award category is Restructuring Deal of the Year. And the award for Restructuring Deal of the Year is for the Chapter 11 sale of Orchid's Paper Products Company. The deal team is Polsinelli Reed Smith LLP, Deloitte Transactions and Business Analytics LLP, Winston & Strawn LLP, Skadden Arps Slate Mager and Flom LLP, K&L Gates LLP, and Lowenstein Sandler LLP. Congratulations, everyone. Our next award category is for Deal Financing of the Year. And the award for Deal Financing of the Year is for the debt financing of H.J. Baker by BMO Harris Bank. The deal team is Carter Morse and Goodrich, BMO Harris Bank, and H.J. Baker. Congratulations. I would now like to introduce our Outlook for 2021 keynote panel discussion participants. Today's panel is led by Jack Butler, Chief Executive Officer of Birch Lake Holdings LP, and will be featuring the Honorable Michelle H. Harner, United States Bankruptcy Court Judge, Jay Goffman, Vice Chairman, Global Advisory, Rothschild & Company, Scott Victor, Founder and Managing Director, SSG Capital Advisors, Lorie Beers, Managing Director, Head of Special Situations, Cowen & Company, and Jamie Sprayregen, Partner, Kirkland & Ellis. And now, over to you, Jack.
So after experiencing a year like no other, it's been dominated by the most global, serious epidemic in a century, we moved into 2021. I think we're all buoyed by a sense of optimism that there's a vaccine light at the end of the tunnel, but we face daunting challenges in this country. We're polarized politically like never before. We're navigating the first non-peaceful transition of power in our history. We are battling a pandemic that already ranks as one of the top 3 disasters and epidemics of all time, surpassed only by the fatalities in the 1918 Spanish flu and HIV/AIDS. And notwithstanding trillions and trillions of dollars of stimulus that have been delivered and will be delivered in the next few months into the U.S. economy, we face enormous social and economic obstacles to recovery. I think chief among them may be the realization that there are fundamental corporate and consumer behavior changes that may alter how our communities work, where we work and how we live and how we go about our daily lives. And so thinking about that as setting the table, let me just ask Judge Harner first a little bit about consumer behavior. I think it's good to start talking about people and make this a kind of a people first conversation. And one of the things that's striking when you look back at 2020, and when you look at the bankruptcy statistics, for example, that bankruptcy cases were up over a third, mega cases a much higher rate than that. But despite the pandemic, despite all of the pain and suffering of consumers in this country, consumer bankruptcies declined by almost a third last year and are at the lowest rate in many, many years. And they declined at a much higher rate of decline in the most recent months. So Judge Harner, as someone who has consumer bankruptcy people in front of you every day, and as someone I know is in your career has focused on the cause of trying to help consumers navigate their lives and to deal with the consumer bankruptcy system. Can you share any insights how you and your colleagues are looking at this? Because I gotta believe that's not what you expected in your chambers and across the country. That's not what the bankruptcy courts I think were bracing for, were they?
You know, it wasn't. And I want to start by saying I think both businesses and consumers are really hurting right now. And I don't think the numbers we're seeing in the bankruptcy statistics necessarily reflect the pain being felt by our consumers. As you noted, businesses have used the bankruptcy system to try to help mitigate their financial distress. And I should note that part of that trend are small businesses. Small businesses do include some individuals. And in fact, we've seen over 1,000 small businesses use the new subchapter 5 of Chapter 11 since the pandemic started. But that trend has not continued into Chapter 7 and Chapter 13 for individuals. And so I'll give you my 3 best guesses as to why that is. First, I do think the stimulus checks, and more importantly, the moratorium on evictions and foreclosures have helped. It's helped the immediacy of the problems that consumers are facing. Second, if you think about consumers who are in financial distress and who are homeowners, our bankruptcy system really doesn't work for them right now. If you're a consumer who wants to save your home, you usually file a Chapter 13 case. You have to have a steady source of income, and you have to be able to start making Chapter 13 plan payments immediately upon filing. Many consumers can't do that. They're unemployed. Yes, they still own their home. Yes, they still want to keep their home, but they may not be able to make a Chapter 13 case right now work. And if you think about the CARES Act that was passed in March of 2020, that helped consumers who had confirmed Chapter 13 plans. It gave them more time to make their plan payments. But if you didn't have a confirmed plan or you hadn't filed Chapter 13 yet, it doesn't really help you. And then finally, I just think with all the uncertainty we're all living in, many consumers, even though they're hurting, are just laying low, waiting to see what happens. And it may be that once the moratorium is lifted and the relief from the government, both state and federal, stops, we may see the real impact of this pandemic.
So I'm going to walk around the roundtable and ask each of you, in responding to Judge Harner's observations, do you think there's been a fundamental change in consumer behavior? And is there a fundamental change in corporate behavior as we come out of this pandemic? I mean, I think one of the challenges as investors when we look at this and trying to think of what's next is what's going to happen to hospitality and transportation and commercial real estate and downtowns and conventions and tax bases. And, the list goes on and on and on. So Jay, I'm going to go right around. I'll go to Jay, Lorie, Scott, and then ask Jamie you to finish up on this question. But how do you parse all this together as we look forward here at the beginning of 2021?
Good.
Jack?
Thanks, Jack. Look, I think you hit on all the right topics there. When you think about fundamental changes in how we all live and how we work, we're all getting used to doing Zoom calls. We're all getting used to working from home. It means less business travel, even when the pandemic is over. It means companies will need less commercial real estate space. It means the people that live in cities so that they can commute a short distance to work won't have to, and they can move out of the city. They can move to other states. And that will have an impact on municipalities and how they pay for their own crisis. So there will be that change. Now, I actually don't think you're going to see it in 2021 as much. I think there are other factors that the government and the Fed are going to continue with that will make 2021 more of a transition type year. But long term, the issues that you're hitting on, how we live our lives, how much people go back to business travel, how big the offices need to be, and where people will want to live, will have a major impact on everything we do in this country.
Lorie?
Yeah, I agree with what Jay said, although I might take issue with the issue of fundamental. I think there will certainly be a disruptive change for a period of time post-pandemic, and that Jay's right. We'll work differently, we'll travel differently. And I think, by the way, the fact that there's less business travel will also have a significant impact on leisure travel, because as everyone knows, the front of the plane pays for the back of the plane. So if there's fewer business travelers, it means that the price of leisure travel is going to go up, which means that that people are not going to be as mobile as they were. But I'm not so sure that it doesn't, if history is any teacher, we know that, a period of time passes after a crisis and things tend to drift back slowly, but drift back to where they were. So I'm not so sure I believe that it's fundamental, but I do think for a period of time we're going to see, major changes in the areas that Jay mentioned. I also think we've seen where I think there might be fundamental shift is in things like retail. I think people are much more comfortable buying things online, getting things delivered than they used to be. So I think that it might be a more fundamental, permanent shift. I think some of the others will come back.
Scott, what do you think?
Well, like the great Zen master said, we'll see. I think there are some fundamental shifts for sure. I, for one, have no desire to ever go to a conference again. I think it's great. That's been one of the best things about this year, not going to any conferences. Love it. Happy to do it on a Zoom call. I do miss leisure travel, hotels. You just saw the Wardman Park in Washington, the Marriott file. I don't know how hotels are staying in existence. I did a whole bunch of restaurant chain bankruptcies this past year, doing a big food service company now. Everybody that's in food services is very distressed right now, obviously. Will the world come back? Yeah, eventually. I agree with Jay. It'll be probably sometime in 22. There's going to be a lot of stimulus this year. Our national debt is going to go up even higher than it is today. But who knows? Who knows what's going to happen? I think commercial real estate, it's a problem. Every single one of you are working from home, except me. I'm in the office. I'm in suburban Philadelphia. So everybody's been back here since June. But everybody who's in a major city, New York, Chicago, LA, no one's back in their office. How's commercial real estate going to deal with this? How are the malls going to deal with this? Because what Lorie said is right. I think retail is fundamentally changed. If you don't have a major omnichannel presence with large online, how are you ever going to survive? You're just not. Nobody's going back to the malls anymore. So I agree with everybody. We all see things from very different perspectives. Lorie and I are much more in the mid to lower middle market. You, Jamie, and Jay are certainly in the upper markets. These lower middle market companies have been really decimated with COVID this year. Crazy.
Scott, I disagree with one thing you said. If you're speaking at a conference, I'm showing up.
Me too.
Well, it's interesting. We talk about consumer behavior, right? We all have a fundamental need to connect with each other, right? And we have a fundamental need. We are social animals. And the question will be, I think one of the things that is so odd, at least it was for me, thinking about this, reflecting at New Year's, is I can actually count on one hand, right? The actual adult social interactions in a social setting, going out with couples, doing things that were kind of fun. that, last year compared to a time when I would be doing it almost every weekend. I mean, just a very, and it was almost shocking to realize how it is. And so, Jamie, when you think about winners and losers, and there's certainly some industries that are winning right now, that COVID's not been bad for, but there's been others that have been decimated. But as you look at the world, how do you see the 2021 and 2022 playing out?
Well, I can't quote the Zen master, but I guess I'll quote Yogi Berra, who says it's difficult to make, especially about the future. So I'll kind of do the best I can. I'm probably a little off from what most of you were saying. And, there's that famous book, crises about this time is different and that it's not really ever any different. I don't know. It's, you talk about like winners and losers. All of us on this call, with due respect to people's birth dates, are on the older end of the spectrum in terms of our development of our careers and our networks. I think the biggest losers of all, I think, are the younger people. I have 3 kids in their 20s, actually one's 31. And, the value, if you go back and look at the value of what I call serendipity over how you develop your business, your network, your friends, your professional circle, are all based on some sort of in-person thing, and all probably mostly accidental, but as a result of being in the hallway in court or in a long settlement conference in conference rooms or at some training session or some conference, not necessarily the educational part of it, but the fun and games before, during, and after. And the ability of young people to get trained and to get inculcated with the culture of their institution and all of that, I think that's a big problem. And I still think that when you say winners and losers, I think you actually had a flattening the competitive advantage. Significant, what I'll call go-getters, have had, who are willing to be anywhere, do anything at any time in any place to win a deal or get things done, because everybody can dial into Zoom. But I do believe the first time, there's a pitch for a new deal and 5 people pitch and 5 are on the phone and 1 person's in person and they win that's the last time those 5 people are going to be pitching by Zoom. Right now, it doesn't matter because we're not capable of doing it. When it's matter is when there's an option of can you go somewhere and you choose whether to be on Zoom or I don't know what we're on. We're on something other than Zoom, but something electronic. And you don't do that. Now, I'm not sure that's what you were asking, Jack, because when you say winners and losers, I'm talking about people. If you're talking about businesses, it's been, quite serendipitous. I have a private equity client who's got a whole bunch of portfolio companies, some in the travel area, that have been tremendously hurt by what's gone on here. Obviously, they happen to have a portfolio company that makes ammonia, and they've been running 24/7 off the charts ever since this hit, because that goes into the hand sanitizer. And so there's the obvious winners and losers, the airlines and things like that are there, or not winners, but losers. But you go through that supply chain into the secondary and tertiary, and I don't know what you call the fourth guy, quadricary or whatever, to provide the hand towel to the airline and everything that goes through that. Those people have been hurt badly. And I think some of it is an acceleration of a secular trend, particularly in retail. And I think most of the bankruptcies you saw happen in 20 were going to happen anyway. But they might not have happened until 21, 22, maybe later. And you had a 3 to 5 year retail cycle. You didn't have that many travel entities actually go in because of what the government did. But, that area, travel, logistics, et cetera. But, there's a decent number of winners. And I heard a stat that I love, that the applications for new employment identification numbers were off the charts during the pandemic. And that's generally used as a sign by the government of what's the health of entrepreneurialism of small businesses in the United States. and this is all anecdotal, but I've read a lot of people who were like got shut out of their gym job, and they went and formed their own fitness program for people on Zoom. And there's been a burst of entrepreneurial activity, and the book isn't written on that, and we'll see how that goes out. But I think there's been a lot of people who've figured out ways to pivot and deal with this kind of situation. I'll stop there. I could go on for a while.
Jay, let me ask you real briefly to try to sort of help us level set the free flow of capital that's going on right now. There's lots of capital chasing transactions. The Dow Jones and other indices are at all-time highs. And how do we, as the president-elect has talked about, the difference between Wall Street and Main Street? How do we reconcile what appears to be going on, on Wall Street and in the capital markets, although treasuries are going up very steadily right now? How do we reconcile that against the real pain on Main Street, where people are having trouble, actually in many communities putting food on the table?
Yeah, look, it's the right question, because it's very easy to just focus on the stock market and the larger companies that many of us deal with and forget about the pain that the individuals are handling right now. There are many people in this country who are out of work, who are have food shortages, who don't know how they're going to pay their bills and don't know how they're going to pay their mortgages. And those people are really suffering. And then there are smaller businesses that Scott and Lorie mentioned, whether it's restaurants or bars or that are being hurt in ways that they're never going to recover from. On the other hand, you have the larger companies that many of us deal with that were a lot less impacted, and that's it's really a factor of how the government stepped in. When the crisis really hit back in March, we'll remember that the Fed stepped up immediately. They brought interest rates all the way down, and they provided massive liquidity to the markets. They said that for the first time, they'll buy non-investment grade debt. And that opened up all the liquidity again, which allowed basically all the larger companies, except those that were going to have to file anyway. As Jamie and Scott and Lorie mentioned, you had the retailers that had been on death's doorstep for years anyway, and they filed. And you had certain energy companies that had just been struggling, and they filed anyway. But the vast majority of them, of the larger companies, they were able to just refinance. They take on more debt, push everything out for a year or two, do amend and extends, relax covenants. Now, in the long run, what that means is that we have billions and billions of dollars of additional leverage on all these companies that they're going to someday have to figure out how to pay for, and that's likely going to be through restructuring. And we have trillions of dollars of additional U.S. government debt that the next generation is going to have to figure out how to pay for. So I think when I sort of break it down, short term, the efforts of the U.S. government and the Federal Reserve helped us get through 2020, will help us get through 2021 and allow things to stabilize. But long term, we have massive restructurings, both for the U.S. government, the municipalities, and all the companies that took on all this excess leverage. They're going to have to be worked through over many years.
So a final question, and we'll do it in a speed round format so that everyone gets a sentence or two and as they think about this. But on a scale of 1 to 10, I'm now going to change up the subject a little bit. Looking forward with your degree of optimism, with 10 being I'm really optimistic and 1 being we're headed towards a huge depression. How do you think about the economy and the country over the next 12 months? How optimistic are you or pessimistic are you on a sort of scale of 1 to 10? And coupled with that, if you could give the new administration one piece of advice, one thing that they should do to move the country forward in 2021, what would that be? Lorie, you're first. We're going to go real quickly. Those 2 questions.
Okay, I think I'm a 4, and I think that in terms of largely because I think there's a lot of pent up stress that has not yet bubbled to the top. And I guess in terms of advice, I think that we need to sort of stay the course on the stimulus actions and try to make sure that we're helping people who are food insecure and jobless to get through the worst parts of this.
Scott.
I'm much more optimistic. I'd say I'm an 8. Yes, we absolutely have to deal with food insecurity. That's just the worst thing in the world. And deal with the people who are unemployed as a result of COVID. But I think in the long run, I'm very optimistic. There's a lot of liquidity. I think everyone's going to get through this. I got my vaccine today, miraculously. So very hopeful about everyone getting their vaccine sooner rather than later. And we'll see how it goes. But I'm overly optimistic.
Jamie.
I'd say 3 things they need to do: vaccine, vaccine, and vaccine, because I think that's what will allow us to get back to normal. And I'm sort of in between Lorie and Scott. I'm at 6.78. I think short term, I'm actually optimistic. I think what the government has done, apropos to what Jay, is going to hold things in good stead through maybe all of 21 into 22, whatever. But I'm midterm to long-term pessimistic, or maybe optimistic for the restructuring business, because as Jay said, I agree with him. At some point, we're going to need to deal with the debt that these companies, but in the short term, we're going to muddle through.
Judge Harner.
So I'm going to say I'm a 5, because I actually think fundamentals are pretty sound. I think the economy is going to recover. I worry about individuals who were marginalized before the pandemic being forgotten about and being marginalized further, and also worry about the maturity walls that we've kicked down the road, as both Jamie and Jay have mentioned. I think at some point we're going to have to face those and deal with them in the restructurings. As far as advice for those in Washington, I think we need some help figuring out what to do with all of the defaulted debt that's accrued over the past 9 months. You can't simply lift a moratorium and expect everyone to be able to pay what they now owe for the past 9 months. So I think working on some guidelines for forbearance and recoveries for both individuals and businesses with respect to landlords and mortgages would be helpful.
Well, I should mention, I appreciate that, Judge Harner, that all of you are invited to participate today, because all of you have received a membership in M&A Advisors Hall of Fame and have earned many of you lifetime achievement awards and leadership awards for your service to the community. I want to finish with Jay, who is actually the latest or most recent of the lifetime achievement award winners and the newest member of M&A Advisors Hall of Fame, and just simply say to Jay, where are you on that scale of 1 to 10, and what would you tell the president when he takes office next week?
Sure. So, well, first of all, I must be the newest member because I must be the youngest in this group. We all know that's not true. But what I would say is, I think for 2021, I'm probably at about a 5.5, because I do think I do think we're going to be fine in terms of the larger companies and the overall economy, because I think the U.S. government's going to put trillions of dollars to work, and I think the Fed will keep interest rates close to 0, and I think they're going to keep the liquidity in the marketplace. So I think we're fine for now, but I still think when you look 2, 3, 4 years down the road, we're probably at a 9 at that point, because I think there's going to be trillions of dollars of debt that need to be fixed. In terms of my advice to President Biden, it's the same as Jamie's. Deal with the coronavirus first. It's what we've all said from the beginning. Until you fix that problem, nothing else can begin to stabilize. And once we do that, and by getting enough vaccines out there, everything will start to stabilize. It'll be different. There'll be a new normal, but it'll start to stabilize. The other thing I would tell them is tell the truth. I think people in this country are smart, they're tough, they're rational, and they're reasonable. And if they hear the truth, everybody will adjust to it, they'll adapt to it, and we'll get through this together. So that's my advice.
Well, that's the last word. And Scott, while this might perturb you, you all are going to end up getting an in-person invitation down the line when we can all gather together, and we'll try to do some element of this live, looking backwards and looking aheadward for whatever that point of time is. Hopefully, it'll be at the end of this year, if not sooner. But thank you all very much.
Thank you, guys.
Thank you.
Thanks,
Take
everybody.
care.
Good to see everyone.
Our next award category is for M&A Deal of the Year. And the M&A deal of the year, 10 million to 25 million, is for the acquisition of Malfi's Super Premium Italian Gin by Pernod Ricard. The deal team is Curtis Mallet Prevost Colt and Mosley LLP, Chisa Shahanian and Gian Tomasi's PC, RBC Capital Markets, Strike Kerr and Johns Beverage Law Group LLP, Malfi's Super Premium Italian Gin, and Pernod Ricard. Congratulations. Our next award is for M&A Deal of the Year over 25 million to 50 million for the acquisition of Genesis Holdings Limited by H2O Innovation, Inc. The deal team is BCMS DJH Accountants Limited, Genesis Holdings, Mills and Reeve LLP, KPMG, H2O Innovation, Inc., and McCarthy Tetrol. Congratulations, everyone. The next award is for M&A Deal of the Year over 50 million to 100 million. And it's for the acquisition of Global Sales Training, Inc., doing business as Richardson by Sales Performance International. The deal team is Capstone Headwaters, Alvarez and Marcel, Armstrong Teasdale, Clifford Chance, and Cartesia Sales Performance International. Congratulations. Our next award is for M&A Deal of the Year over 100 million to 250 million. And it's for the acquisition of Signicat by Nordic Capital. The deal team is FT Partners Signicat and Nordic Capital. Congratulations. Our next award is for M&A Deal of the Year over 250 million to 500 million. It's for the sale of IQMS to Dassault Systems SE. The deal team is Harris Williams IQMS and Dassault Systems SE. Congratulations. Our next award is for M&A Deal of the Year over 500 million to 1 billion. And it's for the sale of Armaz, a portfolio company of Golden Gate Capital, to Arkema. The deal team is Lazard Middle Market, Arkema, Armaz Deloitte, Golden Gate Capital Kirkland and Ellis, Moelis & Company, PwC, and Proskauer Valence Group. Congratulations, everyone. And the final award is for the M&A Deal of the Year over 1 billion. And it's for the acquisition of Converge One by CVC Capital Partners. The deal team is Raymond James, Converge One, and CVC Capital Partners. Congratulations. Thank you so very much for joining our 12th Annual International M&A Awards hosted by the M&A Advisor. And congratulations again to all the winners. So we'll now be concluding the awards section of our program and opening the networking to all of our attendees. But first, a quick thank you again to our sponsors and supporters, including UHY Advisors, Melcap Partners LLC, L. Catterton, Leonis Partners, Churchill, Jordan Knopf and Company, Horizon Partners, Prairie Capital Advisors, Ernst & Young LLP, Wombat Capital Markets, Kramer Levin, Stradley Ronan Stevens & Young LLP, Global Upside Corporation, SB360 Capital Partners LLC, Capstone Headwaters, Axit Capital Partners, Paul Zanelli, and VRC Valuation Research Company. We encourage you to visit our sponsors' exhibit tables while you take advantage of all the other features of our brand new digital platform by clicking Join Networking on your screen below. Congratulations once again to all the winners.